Hello, my dear students. A very warm welcome to all of you in Shri Jaindra Rank Zone. I am your friend and mentor for this subject, Principles and Practices of Accounting. In this lecture, we'll continue with Accounting Chapter 5, that is Concept and Accounting of Depreciation. All the concepts will be covered in the coming series of lectures. So let us begin. This is lecture number 16. Revaluation of Property, Plant and Equipment. Revaluation of PPE. If there is an upward revision in the value of the asset for the first time, then the amount of appreciation is debited to asset account and is credited to revaluation reserve. Debited to asset account and credited to revaluation reserve account. If there is downward revision in the value of the asset, then profit and loss account is debited. Profit and loss account is debited and asset account is credited. If an asset was earlier revalued downward and later on revalued upward, then the appreciation to the extent of earlier downfall is credited to the profit and loss account. If an asset was earlier revalued upward and then later on it was revalued downward, then the downfall to the extent of the earlier appreciation is debited to the revaluation reserve account. In case of the revaluation has a material effect on the amount of depreciation, the same should be disclosed separately. So separate disclosure is required in the year in which the revaluation is carried out. Let us see this revaluation. Revaluation, and that is an increase in revaluation. If there is an increase, credited directly to owner's interest under the heading of revaluation surplus. Exception when it is subsequent increase initially decrease. Recognized in the statement of profit and loss to the extent that it reverses a revaluation decrease of the same asset previously recognized in the statement of profit and loss account. If revaluation is decrease, that is fall down in the value of asset charged to the statement of profit and loss account. Exception when it is subsequent decrease initially increase. So first it is increase and now it is decrease. Decrease should be debited directly to owner's interest under the heading of revaluation surplus to the extent of credit, and the balance existing in the revaluation surplus in respect of the asset. I believe you understood. I believe you understood this. Let us learn the journal entries. Let us learn the journal entries in revaluation of depreciable asset. Revaluation of depreciable asset. Revaluation of depreciable asset. Revaluation of depreciable asset. Fair market value. Fair market value. Asset account would be debited. If there is upward revaluation, asset account is debited to revaluation surplus. To revaluation surplus. This is the case of upward valuation. This is the case of upward valuation. upward revaluation. Revaluation. There's a case of downward revaluation also. Downward revaluation. Downward revaluation. Profit and loss account debit to asset account. Profit and loss account debit to asset account. So this is the case of upward valuation, then downward valuation. It may happen. This is the case of first time upward valuation, and this is the case of first time downward valuation. But it may happen that first time there is a upward valuation and then there is a downward valuation later on. So in that case, we will use revaluation reserve to the extent amount in it, and we will not use profit and loss account. So revaluation reserve account will be debited to asset account. To asset account. Many times it happens the downward valuation is more. In that case, what we will do? First of all, we will debit revaluation account, revaluation reserve, revaluation reserve account debited. The for balance amount, profit and loss account needs to be debited. So profit and loss account needs to be debited to asset account. To asset account. Let us see illustration 13 now. Illustration 13 now. A machine of cost 12 lakhs is depreciated straight line assuming 10 years working life and zero residual value for 3 years. I repeat, a machine of cost 12 lakhs depreciated straight line assuming 10 years working life and zero residual value for 3 years. At the end of the third year, the machine was revalued upward by 60,000 and remaining useful life is reassessed at 9 years. Calculate depreciation for the fourth year. Solution. Solution. Depreciation per year charged for 3 years. For 3 years. The value of asset is 12 lakhs. Scrap value is nil. Life is assessed as 10 years. So annual depreciation is 1,20,000. Annual depreciation is 1,20,000. Written down value. Written down value of the machine at the end of third year equals 12 lakhs minus 1,20,000 multiplied by 3 years. So 12 lakhs minus 3,60,000, that is 8,40,000. 8,40,000. Depreciable amount, depreciable amount after revaluation. Depreciable amount after revaluation equals 8,40,000 equals 8,40,000 plus 60,000 because 60,000 is upward revaluation. So depreciable amount after revaluation is 9 lakh. Depreciable amount after revaluation is 9 lakh. Remaining useful life, remaining useful life as per previous estimate, as per previous estimate is 7 years. Remaining useful life, remaining useful life as per new revised estimate is 9 years, is 9 years. So depreciation for the fourth year, depreciation for the fourth year onwards equal 9 lakh minus scrap value is 0, estimated life is 9 years. So rupee 1 lakh. So rupee 1 lakh. The next topic is provision for repairs and renewals. Provision for repairs and renewals. Let us continue. Expenditure incurred on repairs, renewals, and maintenance on plant and machinery may vary over the years during the working life of the machine. Thus, for equalizing the charge of repairs and renewals, sometimes the provision for repairs and renewal account is opened. Total of such expenses that may be incurred over the working life is estimated beforehand. Average of this expenditure is debited to the profit and loss account and credited to provision for repairs and renewals account, irrespective of the actual expenses incurred. Every year what happens, provision for repairs and renewal account is debited to repairs account and credited to actual expenses account. The balance in provision for repairs and renewal account is carried forward in the end or sale of the asset. The account is closed by the transfer to the asset account for any balance that is left. For any balance that is left. Let us do illustration. The following particulars are available from the books of public company having the large fleet of vehicles. The following particulars are available from the books of public company having large fleet of vehicles. Balance in provision for repairs and renewals account. The balance is 11,50,000. Actual repairs charged or incurred during the year end. For 2016 it is 7,50,000. For 2017, it is 3,20,000. The company makes an annual provision of 4 lakhs on repair and renewals. Draw up the provision for repairs and renewal account for the year 2015-16 and 2016-17. For 2 years, we need to make provision for repairs account. Let us draw it. Let us make it the provision for repairs and renewals account for these 2 years. Provision for repairs and renewal account. Repairs and renewal account. Date, particulars, amount, date, particulars, amount, date, particulars, amount, date, particulars, amount. First of April 2015, opening balance of provision is given over here. So by balance brought down, opening balance, we need to find out this balance. We need to find out this balance. Closing date 31st March 2016 by P&L account. By P&L account, the company makes an annual provision of 4 lakhs as given over here, and the provision is made for from the P&L account, that is 4 lakhs. So 4 lakh come over here. On the same date 31st March 2016, there was a repair. Actual repair charged is 7,50,000. Actual repair charge is 7,50,000. So to repairs account 7,50,000. To repairs account 7,50,000. On the closing date, the balance for provision for repairs and renewal as on 31st March 2016, that is the closing balance of repair, was 11,50,000. So two balance carried down is given in the question. Two balance carried down, that is 11,50,000. Let's total it. Total is 19 lakhs. Total is 19 lakhs. 19 minus 4, the opening balance is 15 lakhs. The opening balance is 15 lakhs. The opening balance is 15 lakhs. This we have found out. The opening balance is 15 lakh. This we have found out. Stretch these lines because we also need to account for 2017. For 2017, stretch these lines. First of all, we begin with 1/4/2016 by balance brought down 11,50,000. Opening balance is 11,50,000. 31st March 2017 by profit and loss account 4 lakh. By profit and loss account, 4 lakh. 11 plus 4 is 15. 15 lakh 50,000. 15 lakh 50,000. 15 lakh 50,000. Let us find out the annual repair in the from the question, that is 3 lakh 20,000. Annual repairs 3 lakh 20,000 is given over here. So two repairs 3 lakh 20,000. 31st March 2017. Closing balance on 31st March 2017. Two balance carried down. 15 lakh 50,000 minus 3 lakh 20,000. 12 lakh 30,000. 12 lakh 30,000. 12 lakh 30,000. I believe it is fine till here. It is fine till here. Let's see the what entry we will pass in provision for repairs and maintenance or repairs and renewals. What journal entry will pass? So journal entry, profit and loss, account debit to to provision for to provision for repairs and renewals, account. And the next is provision for repairs and renewal account debit, repairs and renewals account debit to repairs and renewals or repairs and maintenance. I believe you understood how to journalize this. Yes. Let us continue. Let us continue. Right. Repairs provision method takes into consideration not only not only the cost of the asset, but also the estimated cost of repairs. Estimated cost of repairs to be affected during the useful life during the useful life of the asset during the useful life of the asset. amount of depreciation, equals original cost, original cost minus residual value, original cost minus residual value plus estimated total cost of repairs, estimated total cost of repairs divided by useful life, divided by useful life of the asset, divided by useful life of the asset. Let's learn the accounting treatment. Accounting treatment, accounting treatment of, accounting treatment of provision for repairs, provision for repairs and renewal method, and renewal method, provision for repairs and renewal method. The amount of depreciation, the amount of depreciation is debited to profit and loss account. The amount of depreciation is debited to profit and loss account and credited to provision for depreciation, credited to provision for depreciation and repairs account, and repairs account. B. The actual amount, the actual amount, the actual amount incurred on repairs, incurred on repairs, the actual amount incurred on repairs and and renewals is debited to, provision for depreciation, is debited to provision for depreciation and repairs account, and repairs account. C. C. At the end of, at the end of useful life, at the end of useful life, at the end of useful life of the asset, the the provision for depreciation, the provision for depreciation and repairs account, repairs account is closed by, transferring, is closed by transferring it to the asset account, the asset account. next, next, merit of, merit of, provision for repairs and renewals method. The main merit, the main merit of this method, the main merit of this method lies in, the main merit of this method lies in the fact that it equalizes, it equalizes the burden, it equalizes the on the burden on the profit and loss, burden on the profit and loss account in respect of, in respect of depreciation and repairs, depreciation and repairs. The next is suitability. The next is suitability of, suitability of provision for repairs and renewals, and renewals method. This method, this method is considered, this method is considered to be appropriate, this method is considered to be appropriate where the service, where the service rendered by, rendered by the asset is uniform, is uniform over the useful life of the asset, over the useful life of the asset. I believe you understood. I believe you understood this. Let us understand it deeply by doing an illustration. An illustration on this method. A Limited, A Limited purchased a machine. A Limited purchased a machine for rupee 1,20,000 on 1st April, 1st April 2014, and incurred, and incurred rupee 40,000, rupee 40,000 towards freight, towards freight, insurance, carriage inward, freight, insurance, carriage inward, and installation charges, and installation charges. It was estimated, it was estimated that, it was estimated that its life is, its life is 4 years. Its life is 4 years, during which, during which a period of sum of rupee 60,000 is is likely to be spent on its repairs and and maintenance and at the end at the end the useful life the scrap value the scrap value will be the scrap value will be rupee 20,000 rupee 20,000. Actual repairs actuals repair were as under actual repairs were as under 2014 2015 the repairs were nil. 2015 2016 repairs were 10,000. 2016 2017 repairs were 20,000. 2017 2018 repairs were 30,000. Repairs were 30,000. At the end of useful life, at the end of useful life, the scrap value, at the end of useful life, the scrap value of the machine, the scrap value of the machine realized rupee 16,000 only. Realized rupee 16,000 only. Prepare machinery account. Prepare machinery account and provision for and provision for depreciation and repairs account. Provision for depreciation and repairs account. Let's solve this. Let's solve it. Let's see the question first. Once see the question and then we'll do the solution. A Limited purchased a machine for 1,20,000 on 1st April 2014 and incurred rupees 40,000 towards freight, insurance, carriage inward and installation charges. It was estimated that its life is 4 years, during which period a sum of rupees 60,000 is likely to be spent on its repairs and maintenance, and at the end of the useful life the scrap value will be rupee 20,000. Actual repairs were as under: 2014-15 the actual repairs is nil, 2015-16 it is 10,000, 16-17 20,000, 17-18 30,000. At the end of the useful life the scrap value of the machine realized is 16,000 only. Prepare machinery account and provision for depreciation and repairs account. Solution. Solution. We need to prepare machinery account. So we will prepare machinery account. We will prepare machinery account. Date, particulars, amount. Date, particulars, amount. On 1st April 2014, to bank account. To bank account 1,20,000, 1,20,000, 1,20,000. To bank account, to bank account 40,000. That is installation charges. 40,000 is installation charges, installation and other charges. Total is 1,60,000. Total is 1,60,000. On the last date 31st March 2015, by balance carried down 1,60,000. By balance carried down 1,60,000. Let's move ahead. Stretch these lines. To balance brought down 1,60,000. 1/4/2015, 1,60,000. Thirty-first March 2016, by balance carried down same amount 1,60,000. Just do the totals over here. Same amount 1,60,000. 1/4/2016, to balance brought down 1,60,000. 31st March 2016, by balance carried down 1,60,000. This would be 17 over here. 1st of April 2017, to balance brought down 1,60,000. 31st March 2018, 31st March 2018, by provision for by provision for repairs account, provision for repairs account. We need to find this amount. We need to find this amount. Stretch these lines. Make provision for depreciation and repairs account and repairs account. Date, particulars, amount. Date, particulars, amount. Date, particulars, amount. Date, particulars, amount. Just see the question once again. The actual repair is 10,000, 20,000, and 30,000 for 3 different years. Leave some amount and make a working note. Make a working note. Calculation of the annual amount to be provided for. Calculation of annual amount to be provided for. Annual amount. Annual amount to be provided for equals original cost minus residual value minus residual value plus estimated total estimated total cost of repairs divided by estimated total cost of repairs divided by expected divided by expected useful life of the asset. Expected useful life of the asset. So in the question, original cost is already given, which is 1,60,000. Residual value is 20,000 plus estimated total cost of repairs is 60,000. Expected useful life of the asset is 4 years. So this is 1,40,000 plus 60,000 divided by 4. That is 2 lakhs by 4, which equals 50,000. So amount of provision is 50,000. What we have learnt is amount of provision is 50,000. 31st March 2015 by profit and loss account provision is 50,000. So 50,000, 50,000, provision is 50,000, and this 50,000 would be transferred to balance carried down. To balance carried down 31st of March 2015. Over here it would be 1st of April 2015 by balance brought down. By balance brought down 50,000, and on 31st of March 2016 by P&L account, by P&L account 50,000, by P&L account 50,000. In 2015 the repairs is, in this year the repairs is 10,000. To repairs, to repairs 10,000, to repairs 10,000. Let us stretch these lines. So this is 1 lakh over here, and over here the balancing is 90,000. The balancing is 90,000. To balance carried down 90,000. To balance carried down 19,000, 90,000, 90. Third year, this 90,000 should be transferred over here by balance brought down. By balance brought down 1st of April 2016. Now 31st of March 2017 by profit and loss account. Provision amount which is 50,000. Total is 1,40,000. Total is 1,40,000. Repairs amount is 20,000 in this year. Repairs amount is 20,000. So two repairs. Repairs amount is 20,000. 31st March 2017 to balance, to balance carried down 1,20,000. To balance carried down 1,20,000. So over here by balance brought down is 1,40,000. By balance brought down is 1,20,000. 1st of April 2017. 1st of April 2017. 31st of March 2018. By profit and loss account 50,000. By profit and loss account 50,000. Total is 1,70,000. to repairs is 30,000. 31st of March 2018. This would be the provision created on machinery. Provision created on machinery, which is 1,40,000. Provision created on machinery, which is 1,40,000. Let us try to understand it once again. Provision for depreciation and repairs account. We started with 31st March 2015 by P&L account 50,000. This 50,000 would be taken on the debit side as the closing figure. It should be taken in the credit side in the next year as opening figure 50,000. Now again the P&L 50,000. Total is 1 lakh. Repairs is 10,000. So balance carried down is 90,000. On the same year, this balance carried down will become balance brought down, which is 90,000 by P&L 50,000. Repairs is 20,000 and to balance carried down is 1,20,000. In the next year, that is on 1st of April 2017, by balance brought down is 1,20,000. On 31st March 2018, by P&L account is 50,000. Repairs is 30,000 on the debit side and transfer to machinery is 1,40,000. Transfer to machinery 1,40,000. So provision for repairs over here is 1,40,000. 1,40,000. Just go to the question once again. At the end of the useful life, the scrap value of the machine realized 16,000. The scrap value of the machine realized 16,000. Over here, by bank, scrap value realized 16,000. Scrap value realized 16,000. Debit size is 1,60,000. Debit side 1,60,000. Over here 1,60,000. 140, 16, 4,000. This is nothing but loss. So by profit and loss account, loss. That is by profit and loss account, loss. I believe you have understood till here. I believe you had understood. Let us see what we have done in today's class. Let us see what we have done in today's class. We begin with revaluation of property, plant and equipment PPE. We have seen there could be upward revaluation or there could be a downward revaluation. On when we do revaluation, revaluation reserve account is prepared. Then we have done this sum. We have also seen the provision for repairs and renewals. In detail, we have learned the journal entry, written some notes on in relation to this, done an exhaustive illustration, and we have prepared machinery account and provision for depreciation and reserve account. Provision for depreciation and reserve account is prepared. We'll keep it till here. We'll keep it till here. We'll resume in the next class. Thank you. We're keeping this class till here only. Still few concepts of provision for depreciation is pending. We'll be doing the next concept of provision for depreciation in the next class. And we'll do some notings also in relation to this. We are stopping here. We are stopping here. Thank you. Thank you.